On All About Stocks this week, big earnings and a surprise rate cut. The markets celebrate. We'll tell you what your investment strategy should be. Our investment advisor, Adenwala, tells you why you should be investing in KEI Industries for the long term. And Paras has made a profit of 77% on his portfolio, outperforming the Nifty. We'll tell you how you can make similar returns. Welcome to All About Stocks, a show for long-term retail investors. Remember, all of the advice you hear on this show is meant for a 3 to 4 year horizon in the very least. So we're literally talking to anyone who has a long-term horizon. Over the next half hour, we'll tell you what your investment strategy should be in this market. And we'll take you through what happened in this market, including that big surprise rate cut that the RBI gave us on Pongal morning and how the market reacted to it. We'll answer questions you sent in during the week as well. First, let me bring in my colleague Ajay, who will give us an update on the market action. Ajay.
Well, Faith, this week was pretty rewarding for Indian equities. In fact, come to think of it, this is the biggest weekly gain which we've seen in Indian markets in almost 2 months. So we gained about 3% on the benchmark indices. Well, the biggest booster shot actually came in from the RBI as a surprise on early morning when they actually came out and started the rate cut cycle, so as to say, by 25 basis point. That led to a sharp gain into the market, and we saw almost 700-point rally on the Sensex. Bank Nifty made a fresh record high along with the mid-cap index. But this particular week, the gains were really large-cap led. It was the interest rate sensitive like banks, autos, infrastructure lenders, real estate, and auto ancillary stocks, which are really gaining from the front. But within that, these sectors, it was the large cap which are gaining. Not to forget that it was the FII action which came back this particular week after the rate cut. In fact, we saw a massive amount of positions being added by FIs in both cash segment of the market as well as the index futures, which clearly shows that institutional participation is coming back. The progress of the earnings season, the third quarter earnings season, which has just started, is also happening in line with estimates. No nasty surprises up till now. Infosys was clearly a positive surprise. TCS, Wipro in line with estimates, slightly soft. Couple of private sector banks like Yes Bank and IndusInd Bank have posted good results, again on expected lines. And Reliance, the big boy from the oil and gas space, posted a soft quarter on expected lines. So up till now, the earnings season is happening in line with estimates, but traders believe that there is a floor of the market which has put in place now after the rate cut have actually started, and the near-term direction of the market will depend on the progress of the earnings season from here on.
All right, Ajay, thank you for that update. Joining us on the show this week, as most of you wrote in and asked for, Paras Adenwala, the MD and Principal Portfolio Manager at Capital Portfolio Advisors. Paras, thank you so much for joining us on the show. We're thrilled to have you here. I'm obviously going to ask you first about that rate cut. It was a huge surprise for the market, but the market lapped it up. We saw how, the market turned around on that one particular day. Is this really right now a market for rate sensitives? Is it a market for banking stocks? Is that the sector we should be focusing on going forward?
Absolutely. I think the rate cut so far was very elusive. All of us have been expecting it for the last few months, and it has continued to elude us. And finally, it is there. Therefore, we saw the kind of reaction in the markets that we saw yesterday, which kind of indicated that probably the rate cycle is reversing now. I must commend the RBI governor because it came in immediately after the WPI numbers, which were almost at zero. So I think the reaction from RBI was absolutely spontaneous. And from the investment point of view, I think it's absolutely the time to be getting invested into Indian cyclicals. Be it the banks, be it the infrastructure story, be it the engineering story, capital goods. I think these are the stories which will start playing out well. What can really aid them is also the right kind of policy moves from the government, which the government has been announcing gradually. So I think one has to get overweight on these sectors as compared to the defensive sectors, which has been the story so far.
All right, big earnings that came out this week are TCS, we saw Axis Bank, we saw Wipro. From what you've seen so far, Paras, what is this quarter looking like to you? What are your expectations now going forward in the earnings season? And where are you seeing value in terms of sectors and stocks?
I think most of the results declared so far have been absolutely in line with expectations. IT was not supposed to do as well as it has done in the past, largely because of furloughs. and also because of some amount of currency impact. So I'm not surprised by what these companies have done. I'm not at all negative on them. If there is some further correction in these IT stocks, I certainly would buy into some of the the good names. As far as banking is concerned, I think again the growth story continues. The private sector banks have done reasonably well. The growth rates have been very good. Be it small banks like a DCB or larger banks like Axis Bank, I think they have done reasonably strong, very well. And as credit growth picks up, my sense is the numbers can only get better. And NPA levels, especially in PSU banks, will start dwindling. And to that extent, as I mentioned earlier, I would definitely be overweight on the banking sector.
Well, like Ajay was telling us, RIL earnings came out post-market hours and they were lower than expected, largely because of the impact of crude and the falling price of crude on the company and its earnings. But Paras, tell me this show is about long-term investing. So the people who are watching this show right now could hold this stock for the next 2, 3, maybe 4 years. For a long-term view at this point, would you recommend we continue to hold RIL?
RIL is a very strong player in its areas of operation, be it petrochemicals, be it refining, and now retail, and hopefully it'll get on with telecom. I think it's a very good story, very cash rich, the balance sheet is strong, the management is very focused. But if you look at the last few quarters, I think the company has been under pressure. Looks like it's going to be a long haul before we see the growth rates being augmented. Retail and telecom will need a lot of cash, and it will be some time before they start generating reasonable rates of return. So my sense is there are better bets available, and despite the cheapness of the stock, I think I would look at other opportunities rather than stay invested in Reliance.
I have one last question for you before we move on from this conversation. Now, given the fact that for the last couple of months, everybody has been waiting for a rate cut to trigger the market, now we have that. Do you expect fresh highs on this market before budget day, maybe at the end of February? Or do you think this is where we're going to be in terms of valuations for the next couple of months?
That's a tricky one, hard to predict. If only one could predict what's going to be happening globally, because we cannot stay detached from whatever is happening globally. Therefore, my sense is the markets are going to be very volatile. While locally there could be a slew of positive news coming out, but globally it's anyone's guess what's going to be happening. Be it Switzerland, be it Greece, be it Japan, be it China, you never know what's going to happen. And therefore, there are too many imponderables which impact the sentiment as it stands now. And therefore, I would certainly not make a guess as to where the markets will be 1 month down the line.
All right, so you can't guess where the markets could be, but remember, if you're a long-term investor, we're constantly looking for opportunities in this market as well, which is why we're going to take a look at Paras's own portfolio. It's currently at an overall gain of 77%. This portfolio was designed on the 7th of December 2012. Now, the Nifty over the same period is up 44%, so we are beating the Nifty on this portfolio. I'm going to give you a list of the stocks, and you'll understand why it's doing so well. There's Axis Bank, that's up nearly 100% since we bought it, TCS, L&T, Tata Motors, Sun Pharma is up 142%, Motherson Sumi, Tata Steel, Bajaj Finance, PVR, Shubha Developers. Well, Paras, I understand you want to make a couple of changes in this portfolio right now?
I'm replacing Tata Steel and Shubha Developers with Bharat Forge and Indiabulls Housing Finance, each with a 6% weight.
All right, a couple of changes there in Paras's portfolio, and I'm going to give you a recap of the stocks as they stand right now. There's Axis Bank, TCS, L&T, Tata Motors, Sun Pharma, Motherson Sumi, Bharat Forge, Bajaj Finance, PVR, and Indiabulls Housing Finance. All right, if you have any questions about that portfolio, write to us. Our email ID is on your screen right now. Welcome back. You're watching All About Stocks and ET now. Thank you for staying with us. I'm Faye D'Souza. Paras Adenwala is still with us, helping us figure out a strategy for our long-term portfolios. Now, we asked Paras to pick one stock that we can invest in right now and hold in our portfolios for the long term, he's picked KEI Industries. Now, for those of you who are not familiar with the company, it's a wires and cables industry. It's one of the largest in the country, in fact. And if we pull up the stock for the last 1 year, you'll see it's had a massive run-up. The management has been talking about 20-25% growth for FY15. They're also planning on paying off a lot of their debt over the next couple of years. Paras, tell us why this stock makes your list. It is a small cap stock, and what sort of target do you have on this stock for the coming years?
Yeah, I think KEI is an excellent play on the power segment, be it institutional segment or the retail segment. The company suffered in the past due to its overwhelming dependence on the institutional segment, and it has kind of understood that there was a change that was required in the business model, and therefore it has been increasing the contribution of exports and catering to the retail guys over the last couple of years. So I think the benefits of all of that we'll start seeing now, coupled with the fact that there is going to be an enhanced thrust on the power segment, due to which you will see the industrial demand also growing. So I think on one hand you are seeing a cyclical recovery on the industrial side. Second is an improvement as far as the business strategy is concerned. Third is the significant ramp up in the distribution setup. Fourth is their plan to reduce their debt. All of these augurs very well for the company. And I expect a CAGR of about 20% over the next 3 years in terms of top line, and the margins hopefully should keep on improving. Not only because of the volumes, but also because of a reduction in the raw material prices. Mind you that the key raw materials are copper, aluminium, and these metals have been falling. And therefore, the margins definitely should inch up. The valuations are in your favor. I think they're just at about 9 times on FY16 estimates, as compared to Finolex Cables or any of the other cable companies, which are looking a little more expensive as compared to KEI. I would expect a 50% return over the next 12 months.
All right, so that's Paras's recommendation for this week, KEI. And if you have any questions about that recommendation, feel free to write to us. Our email ID is on your screen right now. We'll have Paras come back and answer your questions for you. Let me take a few questions. Suresh has written in, Paras, he has 1,000 shares of TVS Motors, which he bought at 70 rupees. He wants to know if he should hold on to that stock any further. That stock is on your screen right now. It hit an all-time high this week. Sales were up for December as well. But I want to understand from you what you think the way forward is for TVS Motors. Obviously, Suresh has made a really nice profit, but what can the rest of the investors expect in the year to come?
TVS Motors clearly has done very well, and what has really helped them is a very good growth, in the scooter segment, when one of the largest players in the scooter segment kind of exited, this segment. So TVS Motors has been doing very well in the scooters, has also been doing reasonably okay in the motorcycle segment and also the three-wheeler segment. So my sense is, with improvement in the market share, the growth rates will only get, will be higher than the industry average, and market shares will further improve as we move along. So the recommendation is clearly a hold at the current levels.
All right, hold TVS Motors. Another very interesting question from Ravi, who's written in, should I buy ICICI Bank at the current levels? He says, please give me a target for the next 1 year. ICICI Bank's stock is on your screen right now. Now, all of the banking stocks had quite a week, really, because of that surprise rate hike from the RBI. Paras, now, given the fact that we might see the RBI continue to reduce rates over the rest of the year, what's your call on the banking sector and within the banking sector on ICICI Bank in terms of both valuation and the future ahead?
I'm very positive on the banking sector, and I think the tide clearly seems to be in favor of the sector. We should see, credit growth picking up thanks to the cost of credit coming down. And as the economy gains momentum, I think you will see the volumes picking up on the credit side. Add to that the fact that the interest rates, when they fall, there is clearly a gain as far as Treasury is concerned. So the banks will also benefit out of that. ICICI Bank being among the largest in the country, you will see a good uptick as far as the top line and the bottom line is concerned. And therefore, I think one can expect a very decent return over the next 12 months from ICICI Bank. To put a number in terms of what the target price would be, I think it's very hard to guess. But my expectation of the earnings growth would be anything around 25% over the next 1 year. And it would be safe to assume minimum that kind of a return.
All right, we have another very interesting question for you. Bimal has written in. He says he bought 1,000 shares of Reliance Capital and 3,000 shares of L&T Finance last year. And he's worried there's been virtually no movement, he says, in the prices of these shares over the last 1 year. Should I switch over to some other stocks? He tells us he's a long-term investor. Now, to be fair, Reliance Capital did hit a high of 668 in June, but right now it's trading at about 465. L&T Finance has remained rather flat, though. What would you recommend he does with these stocks, Paras?
I think, if one has seen the kind of movement that we've seen in several NBFCs over the last week to 10 days, I think the outlook seems to be very promising for NBFCs. And we've also seen the results of Bajaj Finance, which were absolutely top-notch. So taking a cue from that, my sense is the numbers for other NBFCs, should also be reasonably good. So at the current levels, I don't think I would advocate exiting out of Reliance Capital or L&T Finance.
All right, I can squeeze in one last question onto this segment. Dinesh has written in. He says, should I buy Suven Life Sciences at current levels for the next 3 to 5 years? The stock ended the week at 206. But what a year it's had over the last 1 year, Paras. It's rallied quite a lot. It's been one of those stocks, especially in the pharma sector, that has done remarkably well. Is this the kind of performance that we can continue to expect for an investor like Dinesh over the next 3 to 5 years?
Expecting the same kind of performance would be asking for too much. But my sense is that the company has a very unique business model and is very, very research oriented. And therefore, the returns should be significantly higher than the industry average. And therefore, my recommendation would be a hold in Suven Life.
Right, hold that stock as well. It's time for another quick break. But when we come back, we'll talk about stocks like Bharti Airtel and Sun Pharma, and we'll take a look at one lucky viewer's portfolio. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Paras Adenwala is still with us as well. It's time for us to take a look at the portfolio of our one lucky viewer this week. Manoj Monga is our viewer who sent in his portfolio, so we've picked him out of the entire list of emails. Manoj, congratulations. Now, Paras, interestingly, Manoj's portfolio, when I look at it, a lot of the stocks he's picked are almost at the same levels right now, so I'm not sure if these are all the stocks in his portfolio or he's just sent us the ones that he's worried about. Right on top, 100 shares of Bharti Airtel, which he bought at 348. The stock is at 342 right now. What's your call for Airtel going forward?
I'm not too hot on Bharti, considering that their international operations, they continue to kind of impact them. Although locally they've been doing reasonably okay. I think I would rather play an idea as compared to Bharti if one has to stay in invested in telecom.
He also has 50 shares of Pidilite, which he bought at 526 rupees. Again, the stock is up by only about another 50 rupees. But since we're talking, and everybody's been talking about the infrastructure sector, this government is really bullish on construction at this point and on housing at this point. Could a stock like Pidilite be a proxy to all of that construction?
I think it's a very good stock. You have both the consumer story plus an industrial story in Pidilite. And it has some of the best brands, that one would really ask for. Plus balance sheet, which is very good, committed management. I think makes a lot of sense to hold on to Pidilite.
All right, hold on to Pidilite as well. 400 shares of Sun Pharma bought at 830 rupees. The question is, how much further can Sun Pharma go? And at what levels does it make sense for him to add more of Sun Pharma to his portfolio?
Sun Pharma, I think, is an evergreen story. A lot has already been said about the company. The stock has done very well. I think the story will continue. And if there is a 10% plus correction in the stock, one can really add on to the stock.
Remember, Paras also has Sun Pharma in his own portfolio. We also have in Manoj's portfolio 1,000 shares of Tata Steel, which he bought at 394. Well, the entire commodities segment is going through a rough time, Paras. So within the commodity segment, do you think it makes sense for us to hold on to steel stocks? And if we do, what about Tata Steel in particular? At what point do you see a turnaround in a stock like this?
I think, as is very well known, globally there is a huge amount of slowdown that's happening. I think there is clearly a risk of deflation that is looming large on most countries except for a few. Given that kind of a scenario, it would be unwise to really expect steel or any of the commodity stocks to do well. I mean the industrial commodities. And therefore, steel also cannot do well when the demand is just slumping. And to that extent, I think Tata Steel probably the gestation period is only getting longer. So I would exit out of Tata Steel at the current levels.
Well, if you were to exit out of Tata Steel at this point, what would you rather have him buy for a portfolio like this one?
I would buy something which is a play on auto, which has defense in it, and which is also has infrastructure all built into it with a superb management. And I would certainly switch into something like a Bharat Forge from the current at the current levels.
Last stock on his list, 500 shares of Castrol, which he bought at 509 rupees. Given the global price of crude right now, what do you think it means for stocks like Castrol, and do you think that we should be adding this stock to our portfolio at this point?
It's absolutely a positive for Castrol. The stock has really run up very fast. The valuations are not very cheap. Again, if there is a correction of about 10 to 15%, one can really add on. Otherwise, one can just hold on to the stock.
All right, hold on to that stock. And if you'd like to have us look at your portfolio, feel free to write in to us. Our email ID is at the bottom of your screen. You'll find a copy of the show on our Facebook page, and you can reach me personally on Twitter. Paras, before we wrap up the show, and thank you, would you like to give us a disclaimer about the stocks you just talked about?
It's safe to assume that stocks like KEI, Bharat Forge, and maybe some other stocks that I would have talked about, I have a direct or indirect interest in them.
All right, Paras, many thanks for joining us on the show this weekend and helping us with our stock portfolios. It's always a pleasure to have you on All About Stocks. Thank you so much for watching.